Coinbase customer data was breached this past week. In an update video from Brian Armstrong, Coinbase CEO, he says they will not respond to the extortion attempts for $20 million from the hackers. I've got Yanis on Writer's Room this week. We're going to talk about KYC and crypto. Bitcoin Season 2 is brought to you by Arch Network, the platform building bridgeless apps on Bitcoin. More on Arch later on the show. Let's kick it off. Welcome back to Bitcoin Season 2 Writer's Room. Colin is on leave. He's actually currently on stage interviewing Eric Trump. That is a true story. So in his absence, I have Yanis, my trusty backup for Bitcoin Season 2. Yanis, welcome to Bitcoin Season 2 again.
Yeah, thanks for having me. And yeah, I hopefully I can live up to the expectations. But yeah, thanks for having me.
I mean, I was thinking like we had the Coinbase customer data breach hack this past week, and you are a very good guy to riff on privacy and KYC with. So let's just riff on it. First of all, yes or no? Are you surprised that there was yet another customer data breach?
No, because I think the biggest risk with KYC and I think giving all this information to all these centralized authorities isn't even with the fact of them hacking the system or doing kind of a social engineering attack. This, from what I've read, this is literally they just went to support agents overseas and were like, hey, we'll give you cash. And they bribed them to copy data from the internal data rooms. And for me, that's the biggest risk with all these KYC initiatives is that there's always going to be these employees as your company scales, kind of, I guess, lower level employees is probably the right term to use. And they become a lot more susceptible to these types of bribes because probably the money that these people were offering was more than they make in their everyday job. And you can criticize people for that, right? It's not the right thing to do, obviously, but these are risks that come with running massive companies. And yeah, you're always beholden to a junior level engineer support person at a centralized exchange where you give them that customer information. So yeah, I'm not surprised at all. We're going to see more of this in the next few years.
Yeah, this will bring up interesting topics. One of the issues with KYC, I think, is that it's mostly been tied to customers' social lives. But in the world of crypto, this I think has some of them. This is where the rubber meets the road most heavily because crypto is so easily sent, and because people usually have it secured in ways where it's, you can go grab it from someone and it's very difficult to claw back. We have this very clear giant carrot dangling in front of attackers, whether it be physical attacks or phishing scams. And we'll get into that. I want to lay some groundwork for what exactly we're talking about here with the Coinbase thing. So this past week, Coinbase publishes a press release saying, we had a customer data breach incident. It affects, quote, less than 1% of our customers. They seem to clarify that it has probably something to do with active customers. If you're actively trading on the platform, there's memes about whether or not that's true or not. I don't really know. And the way that it happened is they've got these overseas support, as you said, Yanis, where they were kind of bribed and tricked and lured into giving away some active customer data. And I want to show this video from Coinbase founder and CEO, and it's classic, white dude talking to a camera video, just because he's got to get down to brass tacks and got to be honest with people. I'm gonna roll tape a little bit here.
Hey everyone. I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. Now, we like to do things transparently here at Coinbase, and so I'm going to respond publicly to these attackers by saying, no, we are not going to pay your ransom. In fact, I have a few next steps in mind that I'm going to share at the end of this video. But for the rest of you watching, wondering what happened, we did an investigation here, and these attackers have been approaching our overseas customer support agents, looking for a weak link, someone who would accept a bribe in exchange for sharing some customer information with them.
Okay, so it's like basic CEO, like apology video. I mean, that's about the best you can do, probably. It is kind of funny because I was joking that like it feels like before this video, like you know, there was some like hostage video that they watched or something, and he's like, we won't bow down to negotiating with terrorists. I don't know, Yanis. What's your take on Brian Johnson's response here?
When you run a company that large, I think you're always susceptible to these types of things. I think just when you scale, like the attack surface of anything increases. So I have a little bit of sympathy in that regard. And these are obviously like obligations and things that they have to comply with to like operate their business. So it's not really their fault that they have to do KYC stuff. But I think that the video itself, I thought was well done. I think when you get into these like crisis communication situation, having the founder just get out in front of it and kind of own it, I think is something that's what needs to be done. I would challenge.
Yeah, it's pretty big for like a public company. They are like the face of crypto for like most of the US.
Yeah, but and it's what they need to do. But I would really challenge them on calling this, I would say, like extortion or anything of that nature. It's like, no, there was a leak in your internal systems, in your processes that caused this. Like the fact that you had this group of like support people who've given away this information is the fault of Coinbase. And it is the fault of their internal checks and balances and the way they go about their hiring and everything, in my opinion. So I would really push back. This isn't like there was a breach in a software vendor or something that happened and data got leaked and now they're holding it at ransom. Like, no, this was I think I think Coinbase is more directly responsible for this than something of that nature. So that's where I would push back on the video.
That's a good pushback. And I think that actually gets into the topic of KYC or know your customer. Also, it goes alongside AML or assume minimum liability. I don't know if these things mean different things technically, but they're usually kind of used in hybrid to just mean, make sure you're not, make sure you, get all your customers' data. So, you're not, doing business with people who the US or your jurisdiction doesn't want you to. And therein lies really the systemic, if there is a problem, that's where the systemic problem is in, Coinbase is required to not do business, say, with Iranians or North Koreans and, other enemies of the US government. So they got to make sure that you're a real person too. But this presents, this whole like customer data thing as goes back, as old as the internet is, because you have all these, like websites and, hacks of people's phone numbers and addresses. As now it's quite common to target crypto companies and crypto exchanges, particularly because that is where the biggest honeypot is of like the easiest users to extract from. Let's talk KYC. For the CoinDesk listener, who maybe doesn't hang out on privacy Bitcoin, privacy Twitter, or privacy tooling, like, what's the issue here, Yanis?
Well, I think the issue, there's a couple of things. I think, like, for example, I think like the Bank Secrecy Act is like kind of at the root of all of this, and like this kind of unwarranted surveillance regime that we have in the United States kind of forces all of these regulations onto these companies. And so it's not the fault necessarily of the company for asking for their customers like passports or driver's licenses or social security numbers or whatever. I think it's actually, but one, you have that side of it where you do have kind of like an unwarranted like surveillance regime that we're supposed to be using these tools with like Bitcoin and crypto and whatever to like escape. But the other side of it is that as kind of an industry, we've pigeonholed ourselves into basically replicating like the old system. So if I'm trying to quote unquote opt out and use sovereign money and become this like more kind of individual who is using these tools to have like a higher degree of freedom and autonomy, the fact that I'm going into things like Coinbase and these types of solutions and just replicating the entire process of signing up for a bank I'm not really differentiating myself from what I was usually doing in the fiat bank system. So I would really push back on kind of the industry at large for creating a systemic over-reliance on centralized exchanges and fiat on-ramps. People say on Twitter things like, "Oh, don't use a centralized exchange. We have decentralized exchanges." I'm like, "Oh, that's great, but we still have to onboard people from the fiat side of the world and have these fiat on-ramps into our ecosystem. And peer-to-peer markets get shut down quite easily. There's a lot of risk with doing those types of things like cash and hand trades, etc." But I would say there needs to be a more intuitive way to think around the current kind of regulatory landscape and kind of compliance world. I think one really interesting solution that your listeners might not be aware of is something called ZK So it's basically kind of a marketplace, or a privacy preserving marketplace, where crypto users and people with Venmo accounts or Revolut accounts or kind of PayPal accounts can kind of communicate with each other in a privacy preserving manner and do trades from fiat money into USDC on a specific like Ethereum aligned chain. And that's a really great way to buy stable coins and kind of start onboarding yourself into the crypto world without having to go through this like entire redoing of KYC, because you've already KYC'd into Venmo or whatever. You're not creating this like further systemic risk of putting your passport and driver's license out into the world. So I think solutions like that are actually really creative in ways around this. I just think for a really long time, we've kind of just accepted that we're going to have this reliance on centralized fiat on ramps, and I think that's kind of a shortcoming and a mistake.
Yeah, it feels like we're just giving up when we're like, well, people read like Hal Finney's Bitcoin Bank post from like 16 years ago, and I'm like, I don't disagree with that. I just see that if you interpret bank to mean the modern form of KYC, U.S. government subservient bank, that's not what I have in my head. I would classify the like issues with KYC into like two large buckets. One is people's right to privacy and the risks that are entailed with not being private, especially if you're known to own crypto assets. And then the other one is just being a target for scams and phishing attempts. I think the more spicier one is that of like having your like net worth or like you being an actual target for attackers is a bit more spicy. I think for the listener, I don't know if like the listener or maybe how familiar you are with this emerging narrative, Yanis, but Jameson Lopp has been tracking known physical attacks against crypto owners. He's got a great GitHub, which I will share, where he tracks like stories published in the news of known physical attacks and who's been like swatted or like people being abducted on the street. This past week, we saw family members of a known wealthy French crypto owner attempted abduction on the streets of Paris. I don't know if you saw that video, Yanis.
Yeah, it's really, my normie friends who are not a part of this kind of sphere of the world even saw it and were asking me about it, which is quite frightening.
Yeah, and so it's crazy because like, while, it's not necessarily clear that the Coinbase hack results in that specific thing, but all of those things in concert with this reality that there are people who've been in this space a long time who are known to have, or probably known to have, lots of crypto, or even if they're perceived to have lots of crypto, they become targets for like physical extortion attempts. And so like you can look at this list. I'm sharing my screen if you're listening. Basically these attacks have only ticked up in the past 2 or 3 years. And it's like really hard to measure because a lot of these are not disclosed. Like if it happens, you might be further putting yourself as a target if it has happened. So like it's really hard to track these empirically, but like this is a major narrative happening, and this is one of like the very clear risks that KYC creates if people are linking their real identities to assets traded, owned, and purchased. The other bucket that I have, as I said, is kind of like the phishing attempts. And that's where, that's probably the majority of the like financial risk. And that's like well above like that's the thing that most people are going to see if probably, I would expect anybody who owns crypto now has probably received some form of phishing or scam attempt in some form. If you've owned crypto for more than a year, just because your name and address gets linked to it. I linked, I don't know if you listened to it, Yanis, but I sent you the SoundCloud link for a well-known OG Bitcoiner named Junseth. And he did some of my favorite content of all time, where he's a well-known OG Bitcoiner and he gets these like inbound scam calls all the time. And he noticed, because he answers some of these, he noticed they started to like appear to be clearly like young American men who are well-spoken.
So if you could, go ahead and navigate over to your phone and you should see the notification for account security. Did you get that?
I did.
Oh, you did? Okay, perfect. Go ahead and tap on that and it should say account recovery, correct?
Mm-hmm.
And they would even go so far as to very sophisticatedly spoof like being from Google or from Coinbase. And he actually got a series of long form interviews with these people as he kind of baited them to stay on the line. I know you're a scammer. Explain to me how and why what you're doing. And it's crazy some of like the ways in which they've managed to acquire this information and optimize for their scam behavior. And it's like these go so far as like to have their genesis in, believe it or not, like Minecraft servers where these kids get together, learn how to like scam a few bucks off people and get more sophisticated, start buying KYC exposed information from, say, Russian data brokers, and then start like using that as a lead to then go find who's got crypto, who is able to like, who is like still a target. It's a really fascinating, like neo underground, system that's been emerging. Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid and they are racing towards mainnet. There's dexes like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users. So join me in trying out Arch while it's still early. Yanis, like you're pretty sophisticated in how you like understand crypto security and custody. And, like there's this, I think, inaccurate view that even like OGs or experienced Bitcoin crypto users, have perfect airtight security. And I think that, while some people are more experienced and have a good BS meter, like just this amount of surface area increases the, attack, just the amount of surface area for vulnerability. I want like, what are your thoughts on like this topic, even for well secured people? Like what kind of risks are we looking at?
I mean, related to like, I think it's also scary, right? Like it's also very scary not having, there's no support button when you're in self-custody. There's no one you can call if you kind of screw something up and be like, oh, I sent the money to the wrong person. Can I reverse that and get it back? There's none of that. So a lot of the risks related to like the topic we were talking about earlier, I think just come with like publicly identifying yourself and putting your name out there and associating with the industry. I think another thing that I just remember once I was at like a conference, right, in a like Eastern European country, pretty big like Ethereum conference. And I was at like a hookah bar, having a hookah and on my computer. And someone just asked me like, are you here for the conference? And I was like, no, they asked, what are you here for? And they were another like Western person. And I was like, this is like, I'm not going to like, why are you asking me that type thing? And it's like, why would you tell someone that you don't know and you've never met that you're here for like an industry event, like a cryptocurrency event? So I think there's that too, where people just like go to bars or go out and they tell people about this stuff, and that also increases the surface area. So I think it's just people a lot of the time being not really understanding the threats. And this is not even like getting into the topic of self-custody itself and like how to better manage that and how to have better security practices. I think it's just a lot of the time people are just very open about being in this industry. It's a lot of people who got very wealthy very young, and they really don't know how to, I guess, not kind of manage that type of like social kind of interaction with people. So I think that's also a big risk where people will just tell people. Like there was one on Jameson Lop's list recently. It was a kid and I think he was like in Ibiza or something. And he was like partying, like a British kid in Ibiza. And he just told 3 people at like a bar that he was like a traitor. And then that was one of the wrench attacks that happened. And it's like, why would you go to a bar in Ibiza and tell everybody that? Right. Like, so I think there's that level of it too, where I think a lot of people underestimate that there are people out there that want to do harm with this type of information. And the more personal information that you even give them in interactions can create a surface area attack that you might not be aware of. And that goes beyond the fact that, are you just managing your funds on like a single signature wallet, like just like a one ledger in your basement?
Are your meme coin profits? Do you have 2 million in meme coin profits just on your Phantom wallet on your phone?
Yeah, exactly. Yeah.
I mean, first of all, congrats, awesome! I'm happy for you. Secure that shit. Like, don't just like flash into somebody in an Ibiza club.
I mean, it's like that too. Like, and then like you see on crypto Twitter, right? People in New York are like selling. Back when it was like 21, they were selling like Bored Apes on their MetaMasks for hundreds of thousands of dollars on video in live stream in Manhattan. And it's like, what are you doing, man? Like, this is really crazy. So I think there's just a lot of that where people, I think, are just unaware of what can happen. And I think that's something I would really recommend if you're doing this and you're doing it for a little more personal freedom and sovereignty. Then I would try to keep that information as close to you as possible.
Where's the spectrum? How much do we opt out? How much do we try to reform the system? How much do we try to just work with the system while being secure? This is an age-old question. It's a bit fraught. It can be a bit rhetorical, but I don't know. What do we do?
So I think there's a couple of things. I have 3 answers to this. I think the first one is like the example I brought up earlier, right? Like use tools, like even though you might have KYC'd for Venmo, you don't need to go KYC again for Coinbase, who's going to be a much bigger kind of attack vector for this type of stuff. Like use your Venmo and go into peer-to-peer marketplace and buy stable coins. And then once you have stable coins, you can buy anything you want at that point. And you can move all this money across different chains, and everything's basically interoperable now. And if you're like a Bitcoin maxi, you can still onboard into a stable coin on Base and just swap it from like Atomic Swap provider or something. So I'd say like have more open-mindedness for those types of solutions for a lot of people. And they might be more inconvenient. You might pay a little bit more in fees, but that's the price that you're going to pay for that extra level of security, in my opinion. And I think the other kind of options here, like we don't discuss taking wages or having companies pay out wages in these types of assets as well. Like why, when we're talking about like Bitcoin is money, then why is it something that we just buy through a centralized broker and treat it like a stock or treat it like kind of an asset that we just want to have number go up? Why don't we look at this as something that companies can put on their balance sheet? They can pay their employees in that if they opt to. Employees obviously reporting that in their taxes or whatever. But we're decreasing the surface area risk of having to sign up for these centralized exchanges. So I think that's something as well. And I think thirdly, like I think there's a spectrum, and I understand that we have to interoperate with the system to onboard more people. But that doesn't mean I think we have to stop the fight. I think the more kind of applications and things that we put out into the world that are integrated with things like Chainalysis and different like kind of, for lack of a better term, kind of like narcware products, right? Like I think that normalizes this regime, and that gives people in Washington, D.C. who are trying to expand this surveillance regime more power and more clout, that the fact that we have companies whose entire existence is to trace addresses and integrate with types of wallets and different products and privacy solutions even to provide a compliant way to use money in a sovereign way. I'm not saying break the law. I'm not saying break OFAC sanctions, but you don't have to bend the knee in the sense that, we have the right, like there's a really good quote from Peter Van Valkenburg back from Coin Center back on the Up Only podcast. Like this just speaking from an American perspective, we have constitutional rights to anonymous assembly and anonymous speech that probably extends into the right to have anonymous payments. We don't need to continually try to comply with things that we don't have to comply for because we have constitutional rights otherwise. So I think there's also that where you don't have to make it not easy in the sense of we're complying with the feds in that way, but more the sense of we're not increasing the surface area for attacks. We're not getting our addresses attached to our names through like surveillance technologies, and we're not expanding that regime. So I think things like Arkham Intelligence, for example, have like these addresses linked to people, and this is like a public database.
Yeah, you could just like be like, I remember like it would be like, oh, SBF's wallet's moving. He's doing this, and it was fun. It was fun to copy train him. Or you can see your favorite venture capitalist is offloading some shitcoin that they said they would never sell, and you're like, oh, blood in the water. But this could be used for more than just trading. It's like
exactly.
Yeah.
And again, it's just increasing the surface area. We don't need to increase the surface area. The surface area is already quite large, and the fact that these things are completely transparent and people think they're anonymous and they're not. And I think we need to, we just need to not normalize the extension of a lot of these different surveillance tools. But that is a very like politically kind of, I'm yapping about privacy and privacy human rights. Yeah. It's more of the practical stuff, as there are solutions that exist today in terms of either companies being willing to pay their employees in these assets, and then secondly, using tools like ZKP2P. There's more coming out. I saw one recently where you can buy stable coins with Zelle. Like there's more like integrated solutions that are coming to market that are already integrated with the fiat system, but they're not forcing you to further KYC into new places that expand the attack vector. So I would say those are like kind of the where do we go from here type points. Like let's look at solutions like that and let's use them, and let's if they charge fees, let's pay them because they're useful services. And I think that's kind of where I'd like to go. Not break the system and try to completely overhaul it, but use things that don't widen the surface area needlessly.
Well, customer data exploits will continue until morale or privacy improves. Yanis, thank you so much for ripping with me on this topic today. The listener, go follow Yanis on Twitter, and obviously his very cool Solana Bitcoin crossover plugin. Shout out to Lemon Drop. Yanis, thank you so much for coming on Bitcoin Season 2.
Yep.
Catch you later.
Thanks for having me.